ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Shrikant, joining you live from India's startup capital, Bangalore, and we have a power-packed show over the next 20 minutes, including a big voice from Silicon Valley. Krishna.
Wow. Absolutely. This is Krishna Kumar coming to you live from ET Now's Mumbai studios. First up, I check on all the big headlines here at ET Now Startup Central. Venky Ganesan, the chairman-elect of US-based venture capitalist body NVCA and the head of Menlo Ventures, is slamming the government on the raids on Sequoia Capital. He says that the Indian government needs to embrace capitalism. That big Valley voice is an ET Now exclusive on the show. And Apple reports its first ever decline in iPhone sales in what marked a disappointing quarter. But India is a growing bright spot. Find out why. Tim Cook is bullish about India on the show. Patni brothers Arihant and Amit are betting big on the startup ecosystem in India to land on that one big idea. They not only jointly handle funds like Hive India, Nirvana Ventures and Idea Spring Capital, but are also active angel investors. And on our Budding Stars segment today, we feature CredX, a startup that helps SMEs raise capital from individual financiers.
And we kick it off as promised with a big exclusive voice we have on the show today. He heads a storied venture capital firm in Silicon Valley, Menlo Ventures, but more importantly, he is the chairman-elect of the National Venture Capital Association, or the NVCA, which is the industry body for venture capitalists in the US. We're talking about Venky Ganesan, who joins us all the way from Palo Alto on ET Now Startup Central today. Venky, such a pleasure having you on ET Now Startup Central. Let me kick it off then with the NVCA aspect. You know, you're taking charge next month as chairman, but what is your own strategy going to be? What will you really looking at doing as the head of this body?
I think the strategy is simple. The NVCA is about representing the National Venture Capital Association in the US and the entrepreneurial ecosystem. We want to support entrepreneurs all over the US and all over the world because we believe entrepreneurship is the engine that drives economic growth for the whole world.
All right, Venky, this is Krishna coming to you from ET Now's Mumbai studios. You are taking charge at a time when there are huge questions surrounding investments and startups and valuations and etc. etc. Bill Gurley warned about the waning unicorn fantasy just a few days ago. Tell us, what is your own assessment of how year 2016 is going to be?
So the story of capitalism always is of bubbles and bursts, right? You need capitalists come in and fund companies, and sometimes they get overexcited and the companies end up raising more money than they should. But I think this is a very natural part of capitalism. We need this. Are there unicorns that are not going to make it? Yes. But fundamentally, the disruptions driving the global economy, mobile, social, cloud, remain intact. And I think the opportunities to build amazing companies remains intact. I'm very bullish long term, but I do think there will be a correction in the late stage market.
Any specific segments of Spain that you want to talk about, Venky? I mean, we've read so much about Theranos, for example, in the last few months, a success story that is facing a lot of trouble, but any particular pockets of concern that you want to talk about?
Yeah, and I think, so a few. I think this whole notion of e-commerce and e-commerce companies that are losing money, those are not sustainable. And I know that you have some of them in India too. In general, I think that companies that are giving away $1 for 95 cents, they're not going to make it. I'm old-fashioned enough to believe that it's not about raising money, it's about getting revenues. And in the last few years, companies have been talking about how much money they raised. I'd rather they talk about how much money they have made.
I want to talk about how much money they make. Venky, it's a situation we are seeing here in India as well, with the largest e-commerce player, Flipkart, getting marked down by 2 mutual funds in the last 2 months. You know, are there India-specific issues then because of the high customer acquisition costs over here and the cash burn, or is this a broader trend according to you?
I think it's a worldwide issue. It's not specific to India. But in general, people have been focused on growth at all costs. That's not sustainable. What we need is sustainable, profitable growth. I'd rather companies grow at a good pace, still making money, than grow at a very strong pace but losing money. And I think we have come to the point where it's no longer growth at all costs.
Venky, notwithstanding the whole caution around consumer internet, the fact stays that, India has one of the most vibrant startup ecosystems. The number of startups is only growing every day. So what is NVCA's engagement going to be going forward with startups in India?
Now, so the National Venture Capital Association is a trade association for venture capitalists in the US, which is the biggest market for venture capital. But when you look into the future, one will clearly believe that India will become. I think India, China, Israel, in addition to the US, are going to be the largest venture capital markets. We at NVCA would like to see venture capital thrive everywhere. So I would love to work with venture capitalists in India to make sure that we continue to push the industry forward and remain the best source of capital for entrepreneurs worldwide.
Venky, as far as funding is concerned, the bygone financial year saw, the funding tap all but dry up. Tell us, what are the broad trends that you see for venture capitalist investments, for the new financial year?
Yeah, a lot of discussion in India has been around these kind of hyper-local e-commerce startups. I think they're interesting, but that's not where all the excitement is. When I look at the excitement here, it is around focus on cybersecurity. That I think will be a very big area of investing for the next few years. I think it's around drone technologies, because I think drones are going to be a game changer. And then it's around virtual reality and augmented reality. So to me, the exciting areas of investing tend to be more on that side than on e-commerce startups.
Venky, if there is one pain point or bugbear which you believe the government here needs to address to really welcome more venture capital into India, what would that be? Of course, VCs have been hogging the limelight for all the wrong reasons in recent weeks, if you go by what happened at Sequoia.
I think the biggest thing is we got to change the cultural mindset. I think the history of colonialism has made us very suspicious as Indians about people who come to trade. But trading is how we create wealth. And we need to welcome capitalism, not make that into a bad word. When I hear about things that the government is raiding Sequoia Capital's offices, that does not feel like a welcome to venture capitalists and capital from abroad. I think we need to culturally change, and rather than worry about people taking advantage of us, know that Indians worldwide can compete in the global market. I grew up in India, but I live in America. I'm an American citizen. Across America, I see Indian Americans leading Fortune 500 companies and making an impact. I would tell Indians, don't worry, you can do it, and you should feel confident to compete in the global market.
But Venky, the view, is pretty much divided as far as Sequoia is concerned. Some have come down heavily on the government for going after them. Others have questioned the inflated price they came in at and why they dealt with politicians. So, can you really brush aside those concerns?
So I do not know the details of this issue, but I do know that Sequoia Capital is one of the best venture capital firms out there. I know a lot of people out there. They are one of the most honorable, high integrity, high achieving folks I know. I don't know the details of this case, but I just think that it's important to deal with these issues with sensitivity and respect to everyone concerned.
All right, Venky, we will wrap things up on that note. Venky Ganesan of Menlo Ventures, thank you so much for taking time out to be with us here on ET Now Startup Central. And here's wishing you all the best for your term at the NVCA in the US. Moving on. But Chandra, we'll have to keep it with US and a US-based company, because there's some shocking news that has come in. For the first time in 13 years, Apple has declared a fall in revenues, all thanks to the slump in iPhone sales. After an unbroken 8-year run of growth since the iPhone's introduction in 2007, Apple reported the first ever slide in iPhone sales. The company said it sold 51.1 odd million iPhones in the quarter, and that is down from the 61.1 million units that was sold in the same quarter last year. And the iPhone for the March quarter accounted for 65% of Apple's revenues. No wonder then both the top line and the bottom line for the quarter missed analysts' expectations. And more so, the Cupertino-based companies also projected that revenues in the current quarter would fall far short of expectations as well. The slowdown, of course, reflects the challenge facing Tim Cook, who took over as chief executive from Steve Jobs in 2011. And that was at a time when iPhone was an unqualified success, the iPad was booming, and the Apple Watch was just in its development state. Now, the company has struggled to maintain sales surges that it has witnessed before following the introduction of its larger screen smartphones, the iPhone 6. In 2014, the 2015 successors, iPhone 6s and 6s Plus, haven't really generated as much enthusiasm from consumers. But here's the thing, there is a bright spot as far as Apple is concerned, and that bright spot is, not surprisingly, India, because the Indian market has managed to post a 56% growth, and that's what Tim Cook highlighted first up in his con call with the media and investors. Listening then to what CEO Tim Cook had to say on his plans, India plans going forward.
On emerging markets, if you take a look at India, we grew by 56%, and we're placing increasing emphasis in these areas. The LTE rollout with India just really begins this year. And so we'll begin to see some really good networks coming on in India that will unleash the power and capability of the iPhone in a way that an older network, 2.5G or even some 3G networks would not do. And so the infrastructure is one key one, and the second one is building the channel out. We've been working in India now for a couple of years or more, but we've been working with great energy over the last 18 months or so, and I'm encouraged by the results that we're beginning to see there, and believe there's a lot more there. It is already the third largest smartphone market in the world, but because the smartphones that are working there are low end, primarily because of the network and the economics, the market potential has not been as great there. But I sort of view India is where China was maybe 7 to 10 years ago from that point of view. And I think there's a really great opportunity there.
Krishna, I think it's important to mention there that, as far as the base is concerned, Apple is still very small. So even if they say 56% growth in iPhone sales, we need to mark that. And some of their, highly priced versions really haven't worked. It's a very price-sensitive market. And I don't know whether to feel happy or sad, because Tim Cook is saying India is where China was 7 to 10 years back. That really gives me some heartburn. I don't know whether I should be happy that he's excited now, or that we are, at least a decade later than China. But moving on from that to startups again here, and this time we're talking about scions of the Patni family, Arihant and Amit. Now, their family really built their fortune in the IT business before Patni sold out to iGate. But Arihant and Amit Patni are betting big on the startup ecosystem, and between them, they have invested in a clutch of funds. Rahul Dama caught up with them. Let's listen into what their game plan is as far as investments are concerned.
The Hive India has actually shaped up really well. We have, it was always meant to be a small fund. We have about 4 portfolio companies and working on one more. One of our portfolio companies, Altizon, just closed the Series A with Wipro Ventures and Loomis Partners. So we're seeing these early bets of ours going to the next stage. Flutura, which is another company based out of Bangalore, should be raising money this year. Idea Spring, which is the expanded platform, will look at investing in about 18 to 20 or maybe 15 to 20 startups over the life of its fund, and more so over the next 3 years. So let's say about 4 to 6 startups every year. And that will be our first check-in. And then we will have a follow-on check, along with the pre-Series A or Series A round for a portion of these startups that we initially fund.
Coming to you, Amit, Nirvana Ventures, which you spoke about, consumer internet-facing companies, that you plan to close the second round of fund there, close to $100 million. What's the progress on that front?
So we are talking to various LPs in US and in the Far East, and we hope to have some first close somewhere by end of September.
I think we saw an enormous sort of funding as well as spending cycle over the past few years. I think it is healthy for that to correct. So as investors, I think we have learned how to invest in these kind of companies a little better. So now suddenly a lot of funds you'll see ask, what are your unit economics? Where 2 years ago they wouldn't ask that question. I think founders have gotten a little more intelligent and realized that when money flows in, you have to be intelligent about spending it. So I think these are all healthy parts of the cycle. I don't think it is going to be a massive bubble eruption. I do think that it is frothy and it has come off. It already has come off. It'll come off more.
What's really driving this interest in the ecosystem here?
I think, after working with the family business for the last 25 years, when we started Nirvana, the idea was, of course, to deploy money into alternative assets. At the same time, the drive is to, bring value and mentor these entrepreneurs, startups, and that's where you enjoy.
Startups watching this show, if they have to pitch to you, which areas would you be investing in? What is it that you look in a startup before you invest?
Pretty much anything that is sort of capital efficient. So not that takes up a lot of fundraising and to get off the ground. Something that's early. So obviously angel would kind of that would make sense to that creed. And as my brother said, it has to be interesting. It has to be good founders, high energy. So really from an industry point of view, it could be anything.
And it's time now for our special segment, Budding Star, where today we have CredX, an invoice discounting platform that connects micro, small, medium enterprises to individual financiers to raise capital against unpaid invoices. The fintech startup has closed $750,000 of funding from Prime Venture Partners recently. Rahul Dayama caught up with Manish Kumar, CEO at CredX, to know how they're solving the problem and what sets them apart. Let's listen to that conversation then.
We are primarily an invoice discounting platform. What we do is we help SME sell their invoices, unpaid invoices on our platform at a discount to a set of investors. On the other side of the platform, there can be institutional investors, retail investors who can purchase these invoices at a discount. For SME, it's solving their credit and solving their cash crunch. So they are getting the working capital right now, which earlier used to get stuck in unpaid receivables. Now they're getting the money in like 2 days from on our platform. At the same time, the investors are getting a good return by assuming very low risk.
Okay. So you're essentially using technology to really bridge the gap.
Yes. So invoice discounting is happening in India from donkey's years, right? So, but it's always unorganized, and it's mostly happened because I know you, you know me, so we are doing the transaction. What we are saying, that's not a requirement. Why don't we, use data, use risk modeling, use technology, and just make it emotion neutral and location neutral. So now I sitting in Bangalore can discount some SMEs invoices sitting in Delhi and vice versa, right? I don't need to know what is the name of the SME. I just need to know what is the data, right? If it is a growing SME, whom he is producing it to, what they are producing it to, right? Okay. That's it. And I'm comfortable doing that.
Okay. In terms of revenue model, how are you monetizing this? Have you already started monetizing? Are you working on a commission-based process?
Yes. So we are already into revenue generation mode. We are already monetizing from day zero. What we take is a transaction fee or a service fee on the platform from both the sides. So the seller of the bills, which is the SME, he also pays me. The buyers of the bills, who's getting the interest, getting the income, he is also paying me.
All right.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.